Welcome to the Jay Martin Show, where we dissect the greatest minds in geopolitics and finance. My guest today is Grant Williams, who will also be joining me live on stage in Vancouver, British Columbia on January 19th and 20th at the Vancouver Resource Investment Conference, alongside 80 other keynote speakers like Danielle DiMartino Booth, Robert Kiyosaki, David Rosenberg, Rick Rule, and dozens more for 2 days. Check out vricmedia.com for tickets today. Here is Grant Williams. Enjoy.
This is Jay Martin.
Okay, here I am with Grant Williams. Grant, it's so good to have you back on the program. Thanks for making the time.
Jay, always a pleasure. I thoroughly enjoy our chats whenever we get a chance to do them. So I'm looking forward to this one too.
And soon in person in Vancouver in like just a few weeks at the VRIC. Looking forward to that. So, okay, here's where I want to start today. We're beginning the new year, 2025. I just want to get some context from you right now. What are you most focused on? You can go into forecasts if you want to, or just what's catching your attention right now, because there's a lot. And take as much time as you need. And then I'm just going to pull on some threads from there.
Sure. You know, it's funny. We all we assume that we turn the page on an old year and we start a new year, and we all sit and take stock at January the 1st as if it's meaningful in any way, right? Which of course it isn't. You know, the world continues to unfold, just the way it unfolds. The one difference this year, I think, is going to be January the 20th, right in the middle of the VRIC when Donald Trump is sworn in. And you know, interestingly enough, plenty of people that I've spoken to about this in the last couple of months have still stick to saying, you know, if Donald Trump is sworn in on January the 20th. And that's really an important kind of harbinger of the times we live in. There are people that suspect that, you know, the swamp will find some way to stop him. And there's been all kinds of stuff on social media in the last few days, Democrats saying there's a way that they can stop him being certified by the Electoral College. All the way from there to potential assassination attempts, you know, a successful one this time. So that should give everybody a real sense of the kind of unease in which the world finds itself right now. This is not something we're used to. You know, the peaceful and seamless transition of power in America has always been a given for everybody around the world. And that has kind of led Western democracy through all kinds of crises. And we've seen autocrats be put in place in Europe during the European debt crisis, for example. You know, Mario Draghi being the great example of one of the kind of technocrat people that was installed. We've seen plenty more of those, but that was always kind of a means to an end, and this is a solution to a problem we have. But what we're seeing now across Europe is the kind of, I guess it's the natural extension of that. You know, we're seeing elections cancelled. We saw the Romanian election result cancelled because, you know, a party which has been labelled far right won, and the incumbents don't like them. And instead of looking at why so many right-leaning parties are winning significant proportions of the votes right across the Western world, there's this kind of rage against the dying of the light from this kind of incumbent globalist cadre of officials around the world. And, you know, I think for us as investors, it's important that we find a way to take a step back and look at what's happening without doing so through the lens of the kind of descriptives used by the media to describe both people, parties, and election results. It's very important that we find a way to do that. And it's not easy. Don't get me wrong. It's not an easy thing for any of us to do, because we are bombarded day in, day out by the kind of language that, if you've been paying attention, you've seen increasing significantly over the last 10 years. You know, the R word, you know, racist, is a really important word for us to recognize and challenge. You know, it's important that we challenge it, because this idea of someone being a racist is, once they're labeled with that, it's been the death knell for an awful lot of people in public life. Once they've been branded a racist, they're basically finished. And so you've seen this label being affixed to many parties and people, and it's increasing in its volume over the last couple of years because it's worked so well. And so suddenly you're starting to get people and parties called far right and called racist because the media knows that once you brand them that, it will stop a lot of people from associating with them. And yet, at the grassroots level, we are seeing a lot of these parties gain significant percentages of the votes. And there's a reason for that. It's not because 20 to 30% of all these Western democracies have suddenly become racist. That's just not the case. The case is that there is an issue that's unfolding across the world with regards to immigration. And it's something that we have to be able to find a way to talk about because it's clearly one of the issues that's uppermost in a lot of electorates' minds. And instead of it being an us against them discussion, instead of it being you're against everybody of any other race or creed or ethnicity, there should be some attempt made to look at a lot of the reasons why previously right-thinking people who weren't branded as racists have fallen into that camp. But a lot of it comes down to just the strain on public services, the cost of living, all these issues which governments have let unfold on their watch over the last couple of cycles have meant that people's quality of living has deteriorated. And we've seen for the first time in multiple generations, a generation who is going to do worse, or which is going to do worse, than its parents. And that's significant. Living standards are deteriorating. Stuff remains cheap, credit remains abundant, and yet living standards are deteriorating. And that is what's causing a lot of people to question a lot of the things around them. And the easiest way to wrap that up is in the racist label. So, things like that, we as investors who are trying to figure out which way all this is going to unfold, it's really, really important, more now than I think at any point in my investing lifetime, which is, I'm into my 5th decade now of doing this. It's really important to find a way to not let the dog whistles agitate you, to be able to step back and look at the world through as unbiased and as objective a lens as you possibly can. You're going to get very little help from the media. This is something you've got to take ownership for, responsibility for, and you've got to sit back and try and understand the world as it is, rather than either how you wish it to be, because how you wish it to be is how it was. We're all the same. We don't like change, and the world, from an investment perspective, has been pretty good for several decades now. We've had some turbulence in the last decade. But really, we've been on a one-way train for a long time. That's all changed. It's all changed now. And the sooner people find a way to honestly assess those changes, both in the world around them and, importantly, what that means for their portfolios going forward, the more chance they have of avoiding what, even by the law of averages now, is a potentially problematic outcome. And because we have had so many good years, the longer those times go on, the longer we see stock markets float to all-time highs, and the longer they seem completely dislocated from their valuations, the higher the percentage chance that we could have an upset. And I've talked about this a lot for a number of years now. Just this idea that people need to be aware that you don't have to sell everything today and go to 100% cash, but you have to at least be aware of the things that can hurt you, the things that will cause you a significant loss of capital, which it's going to be much harder to replace than it has been over the last 10 years. So I'll stop there because I've seen you making a whole bunch of notes, and we can get into any bits of that you want to. But I think the January 20th inauguration of Trump, assuming it goes ahead, is going to be genuinely a point in time after which things are going to change significantly. And I think, like turning the calendar for a new year, January 21st, 2025 is going to be the start of a very different investment landscape for all of us.
Okay. Yeah. In your statements about people being pushed into these groups and labeled far right and prejudice and all of this, and everybody who's listening to this can relate to that, maybe personally, and we definitely saw a lot of that in Canada over the last few years.
Yeah.
And I'd say there was a sense of optimism that I felt after the November 5th election in the United States, that maybe we had hit a tipping point and the public had begun to wake up a little bit and push back and vote for change in a very big way. We'll see if Canada can do something similar in the near future.
Well, Jay, sorry to interrupt, but a couple of things I think are worth kicking around. The first is, I've seen Pierre Poilievre described as far right in the past, right? I mean, I've seen that label thrown at him before,
for sure.
And also with regards to the November 5th election in the US, what's been fascinating to me in the where are we, not quite 8 weeks since, has been how quickly the world outside the US, to say nothing of inside, has kind of seized upon that as an opportunity to perhaps voice things and ideas and sentiments and viewpoints that they were almost cowed into keeping quiet about before Trump. It's kind of unleashed. You can feel it. This pent up sense of, okay, I'm done with being labeled all these things. I'm going to speak my truth. And I feel like I can do it now in a way that I'm not going to get shouted down. And that's a big, big change.
Yeah, agreed. And I think you are seeing that through the political ranks in Canada.
Absolutely.
More and more, even like Trudeau supporting Liberals are now abandoning the party and calling for his resignation, because whether they're just following the leader, or just protecting their own interests, probably both. But you're right. There's been a definite tide change, a sea change. Now, you mentioned a couple of things. You said the last 40 to 50 years has been a very favorable investment landscape and relatively predictable. And then you said all that's changed now. You also put a lot of emphasis on, the change that will occur on January 20th. So I feel like those are maybe two different things. There's an investment landscape that's been going through a tectonic shift for the last few years and will continue. And I think I've heard you and Luke Groman talk about, we're moving from an era of the spider chasing the fly to the fly chasing the spider. I'm probably butchering that a little bit, but maybe you could elaborate on that. And maybe let's start with that, and then I'll get into the maybe the Trump shift a bit more.
Yeah. I think it's a really important point for people to understand. These last number of years have been characterized by ever declining interest rates, and the ability on the part of central banks every time there was a problem to lower rates, to print money, to buy bonds, to solve those problems. And we're kind of in this kind of no man's land at the moment, where those options as viable, credible policy options for central bankers and governments around the world are off the table now. They're done. Forget it. I mean, we've seen 100 basis points of cuts in the US on the Fed funds rate, and we've seen the 10-year increase by 100 basis points in Europe. I think I'm right in saying that's never happened before. And it's a huge problem. So we're in this period where the things that have worked so well in not just keeping the lid on problems as and when they've occurred over the last couple of decades, particularly, but also kind of maintaining the ability of people to generate returns, to take risk, to know that there is almost a deus ex machina, this unseen hand at the back that's going to kind of tilt the table in your favor. That hasn't been disproven to people yet. And this is the kind of thing that people need to see fail before they will believe that everything won't be okay every time, just as it has been, because they've been conditioned over many, many years, over many cycles, over many periods of interference in kind of the normal functioning of markets by policymakers to believing that things can be fixed. And they've had that viewpoint reinforced over and over again. Mm-hmm. They're now seeing, if they're paying attention, that for the first time, 100 basis points of cuts has done nothing to stem the tide in terms of rising interest rates. But it hasn't impacted anyone's 401k yet, because markets are still bouncing along at all-time highs. And at those points, people don't tend to question valuations. People read about an all-time high in their 401k. They get the statement every month. They're over the moon at how much money they're worth. You know, this wealth effect that was one of the big reasons all these methods were tried, was to generate this wealth effect. No one's questioning the valuations here. No one's really asking, well, I see I'm up here. Why? Why is my 401k up this much? Because no one cares. They only want to know why when the market goes down. So we're in this kind of no man's land. This, you know, it's the moment where Wile E. Coyote's run off the cliff and his legs are still spinning and he hasn't looked down yet. The question is, what is it that happens at this point now that kind of shocks people into understanding that the world around them has changed? You know, is it the resurgence of inflation? And you can find plenty of analog charts that you can overlay the current second wave of inflation that paint a picture of the potential for significant increase in inflation on our doorstep again, which will create huge problems for central banks given the amount of debt. Or is it a deflationary problem? If you look at Chinese government bonds, you'll see the yield on the Chinese 10-year about to go below 1%, which has also never happened before. And that's another huge canary in the coal mine. If China has a deflationary problem, that will be felt all the way around the world. And so whichever way you look at it from here, there is a significant probability rather than possibility of increased volatility that will be driven by an inflationary shock or a deflationary shock. And the chance of threading that needle, given the policy tools available to policymakers now, and as we've seen, 100 basis points of cuts does not get you what you want anymore, is a big sea change for us as investors. And so, you know, as we look ahead to how 2025 is going to be, you take that as a backdrop. And by that, I mean the constraints under which policymakers are operating, i.e. they've got, 400 basis points left in the tank, give or take. And the first 100 have a negative effect. So that's problematic. You look at the inordinate amount of debt that has been ladled onto every balance sheet in the Western world. And then you throw in Donald Trump, the chaos he brings, the policy changes he brings, the tariffs he's threatening, the upheaval, the withdrawal of America from things like NATO in terms of its contribution, which has always been taken as for granted. And don't get me wrong, Trump has a very valid point, particularly about NATO. The points he's making about NATO and Europe paying their share of the defense bill, it's very difficult to argue with him. Mm-hmm. The question is, or has been before now, why hasn't any previous American president done anything about it? And that's a political question with a whole series of political answers. And Donald Trump is in many ways a political animal, but in many ways he isn't. And so that injects a further variable into a very unstable situation. And we're all going to have to figure this out as we go along. And, I think when Trump was first elected, people were talking about you had to take him literally, but not seriously. And now I think you have to take him literally and seriously, because I think he's come back. He's only got 4 years now. He doesn't have to campaign for a second term. He knows how the game is played now much better than he did when he was first there. He definitely has some scores to settle. Whether he will be vengeful or not, we don't know yet. But it will be a brave man to categorically state that that's not the way he's going to operate and try and settle a few scores. And all of it, everything we've spoken about in this first 15, 20 minutes comes back to one thing, and that's heightened volatility, heightened risk, and less stability around us. And that for investors is a toxic combination that you need to be fully prepared for. You're not going to be able to get everything right, but you need to be aware that this is the world you're facing and have a plan for it.
Just one comment on that second term. I almost felt that it was amazingly advantageous to have your term broken up into two blocks like that, because you come away with all of these hard-earned lessons. You have 4 years to implement those internally and plan, and then you're back. And this time you're back You're not worried about a second term, as you mentioned. You've got the majority, you've got the House, you've got the Senate, and you don't have to worry about what's going to happen 5 years down the road because you're just like, I need to go for it right now.
Yeah.
So there's two directions I want to go here. I want to touch on your Trump, NATO, and then Europe comments. I want to get into that. But before we do, I have to pull on one other thread. So the majority of inflation, deflation conversations I have on this channel, my inflationists say that Trump's tariffs are going to increase cost to consumers. That's inflationary. He's going to deport a percent of the labor force. That's inflationary. He's going to accelerate reshoring efforts. That's inflationary. And then the deflationists will say, yes, but as bigger industries and companies implement more AI strategies, this will be profoundly deflationary. Trump's back in office. He's going to accelerate energy production. That's deflationary. Love to know your thoughts on that, but also Chinese 10-year bond falling below 1%, leading to a potentially deflationary event. I need to understand that better, Grant, that piece right there. Any thoughts on the inflation deflation debate at that kind of surface level? And then I want to dive into the China comment.
Yeah, I mean, look, the inflation deflation debate. It's very possible and highly likely that everyone is going to be right about this. It's just the sequencing that's going to be so important to get right. And I think the crutch of AI as a deflationary tool, I understand completely, but it's almost a convenient way to frame the deflationary threat by saying AI is going to create a wave of deflation, and it very well might, and it probably should. However, I think that the inflationary threats are here and now, and more importantly, perhaps, is not just the inflationary threats, but also the backdrop against which these inflationary effects are going to be occurring, and that is this mountain of debt. That I don't know if you've seen the chart of the interest expense of the U.S. government now. I mean, it's just taken off on the right hand side of the chart, which we've known was always going to be the case. If you look at how they've managed to keep a lid on interest expense as a portion of kind of government outlays, as the amount of debt has exploded, of course, it's by keeping rates down. The debt doubled and rates halved, essentially, call it that. And so optically, it all looked fine. The government can easily afford to pay its interest bill. Now that chart looks, it's horrifying. It's one of the scariest charts out there, I think, because it's a fixed cost that the US doesn't have any real leeway in getting around other than trying to lower that interest cost. And we've seen what's happened as they cut rates by 100 basis points. So to me, the inflationary threat is more immediate than the deflationary threat. The deflationary threat could come through a recession. But there is a non-zero chance that we get a stagflationary environment, which is, again, going to be problematic. And what you said, Jay, is absolutely right. There are so many, between all the companies reshoring, between the tariffs, there are so many ways in which inflation can get a hold again. And it's such an insidious problem. There's a great quote from Lenin, which I will completely bastardize, but this idea of inflation being such a significant problem, and I know he said that not one man in a million will be aware of it, and it's true. It is an insidious problem, and it's the one Achilles heel that has not been present for all of the interest rate cuts that we've seen over 2 decades. That inflation is the flame underneath policymakers' feet, and their feet have not been held to the fire. They've cut and cut and cut, and we saw $17 trillion worth of negative yielding bonds. It's hard to believe that, but a couple of years ago, that's exactly where we were. But for one reason only. There was no inflation checking the impulse of policymakers to cut rates again. It's there now, and it's a very real problem, as we've seen. So that is a sea change in everything that we have come to understand about how things function. We have lived through a deflationary environment for a long time now. the last real bout of inflation was almost 50 years ago now. So there aren't that many people investing that were around who remember it and understand how to invest your way through it. There are some terrific books about inflations. A couple that I've recommended many, many times are When Money Dies by Adam Ferguson and The Dying of Money by Jens Parsons. There's obviously a Jens O. Parsons. Both of them are available as PDFs on the internet. It'd be very difficult to find a copy in print anymore. But they're both first-hand accounts of what happens in periods of high inflation. And to read them is quite the experience, because you'll read them, you'll recognize all the signs, you'll recognize all the dominoes lined up. What you won't recognize is the outcome, because we haven't reached that part yet. And so reading those books will give you a sense of what can happen. And, this recency bias that we all have tends to lead a lot of people into thinking, well, that stuff can't happen, won't happen. Those books will demonstrate to you beyond any doubt whatsoever that they can happen. They may not convince you that it will happen, and it won't happen exactly the same way. But part of the problem is being aware of the potential outcomes that can hurt you in your portfolio. And that is, I would say right now, probably the biggest threat you face.
Yeah. Okay. When Money Dies and The Dying of Money.
Yeah. Adam Ferguson is the first one, and Jens O. Parsons. And Parsons is spelled Parsons. And if you Google them, you'll be able to find them. They're not long reads, and they're certainly not difficult reads, because the stories are just remarkable. Truly, truly remarkable.
Now, when you could look at AI as a deflationary technology, because all technology should be deflationary. It creates efficiencies that in theory bring costs down, which would you agree is also an opportunity for money expansion, because it decreases the impact of money expansion. If we're experiencing technological driven deflation, we can inflate the money supply with less of an impact felt by the consumer. Does that make sense?
Look, we can try.
I'm not saying we should. I'm saying that's what happens.
I take your point completely. And we can try and do that. And I suspect at some point we'll be forced to try and do that. The question is, will it work this time around? And, if you're pinning your strategy on the hope that you get just enough deflation to offset the inflation that you're trying to put into the system,
right?
That's a very, very tough needle to thread. And the problems created if you get it wrong in either direction are significant. And, right now you kind of better hope you get deflation, not to any great degree, because people will remember what happened in the 1920s and 1930s. But inflation with these debt levels is a problem. And it's interesting, going back to what we were talking about Trump earlier on. I don't know if you saw, he tweeted something, I think this morning or overnight, perhaps, talking about the Speaker of the House. But what he was really talking about was the raising of the debt ceiling. And he invoked 1929 and talked about how this was a Democrat problem, and the Democrats have set the system up. And, I think when you said earlier about how the advantages of having a 2 4-year terms split by another president, they're definitely there. But there's a certain degree of hot potato about all this. The system has been building up, the stress in the system has been building up, and at some point someone's going to get thrown the hot potato and burn their hands on it. And it could well be this Trump administration. It could well happen in the next 4 years. And that's not to say it will necessarily be Trump's fault, nor is it right to say it's Biden's fault. It's Trump's and Biden's and Obama's and Bush's, and Clinton's probably the last one that could have any, as the only president who's balanced the budget in the last 50 or 60, 70 years. He's the only guy who can probably hold his hands up and say it's got nothing to do with me. But this is how the system has been designed, and it was always going to be abused in the way it's been abused, because it can be. And there was always going to be a day of reckoning, and that day of reckoning is one day closer to us today than it was yesterday. That's all we know. We don't know when it's going to happen, but I guarantee it's a day closer. And every day it gets closer is a little bit more thought you have to give to how the outcome might affect you.
Countries are making moves on the geopolitical chessboard. New alliances are forming and new enemies are being made. If you're at all curious how you can position your investment portfolio to turn chaos into opportunity, you can't afford to miss the Vancouver Resource Investment Conference. January 19th and 20th at the Vancouver Convention Center. Visit cambridgehouse.com for tickets today. It's another, like, recency bias hits us so hard there because we talk about the debt ceiling and then we look through history and it's like, oh, we've raised it, I think, like 80 times.
Yeah.
At this
So
point.
what's the problem, right?
Oh, what exactly? We know what the outcome's going to be. We're going to raise it again. Like, why are we pretending this is not a thing? You know, bunch of headlines, bunch of debates. We know what's going to happen here. You know, it's so easy to just lean on that and be like, this is what we do in that scenario. Right? Yeah. What's your take on the China-US trade war? Because, you know, one thing, after Trump was elected the first time in 2016, I read his book, The Art of the Deal, which he published in the 80s because I wanted to try to understand this guy.
Yep.
I feel like his negotiation strategy has not changed at all since the mid-80s.
I agree.
In that book, he's like, you want to walk in the room and you want to say something crazy and throw everybody off balance, and then you slide in what you really want. And you get it because it's so moderate compared to how you entered, you know. And I kind of feel like these tariff threats are in line with that. China's now firing back with, you know, their own reciprocal statements. But at the end of the day, you could say that, you know, China is a business and the U.S. is the customer. Right. And you're going to take care of your customer and you're really handcuffed to your customer in many ways. Now, obviously, the U.S. needs a lot of what they buy from China. So they're handcuffed. It's a two-way street. But what's your take on the Trump tariffs, the statements made thus far, and the U.S.-China trade war that will probably heat up?
I think, first of all, I think you're absolutely right about Trump and the way he negotiates. I don't think that's changed. What I do feel confident in saying is that the people that he's going to walk into those rooms and sit down with are also a lot more used to him now than they were 8 years ago when he first walked into those rooms, because they'd never seen anything like him. He wasn't a politician. He wasn't a negotiator. He was a bully. And that's not typically been the way politics has worked. But we are moving into a phase now where politics is going to be a lot more about bullying, because people have important domestic agendas they need to attend to. And the idea of international politics trumping domestic politics has always and everywhere been a false one. There just have been periods of time where you've been able to prioritize the former over the latter without any detrimental problems being experienced at home. That's not the case anymore. You know, Trump has a domestic agenda he needs to deal with. And that's what's going to drive his negotiations. But at the same time, Europe and China and the Middle East and all the people that Mexico and Canada, all these people that Trump is, you know, talking about how he is going to walk into those rooms and is going to make these exorbitant demands. And, you know, we got a glimpse into Trump's mindset when he said in his first campaign that, you know, he could shoot someone in the middle of Fifth Avenue and, you know, nothing would happen to him. He believes these strategies make him bulletproof. And he may turn out to be right. He may do, because America is that big and that important. But Europe has significant problems of its own, from the top down this time as opposed to the bottom up, which we saw in 2012 when we had the European debt crisis explode. We've got a German problem now as opposed to a Greek one, which is very different in nature and much more existential for the union as a whole. China has problems of its own. Canada clearly has problems of its own. The UK is a basket case. Everybody is now facing domestic issues that, if they don't get a handle on, are going to see them turfed out of office. And that is a politician's first order of business is to win power and then to hang on to it, period. No politician is ever going to make a decision that he knows will get him kicked out of power. He'll find a way to kind of put it off and postpone it and tweak it here and there to make sure he can give people something that will win him votes. We're kind of at the point
Which is
where the
why we've
things,
increased the debt ceiling 80
yeah,
times. Well, that's a
of course.
great reason. Yeah.
But now, to the point that I made at the top of the show, one of the things that you're going to need to address as a leader of a lot of these countries is the immigration issue. You're going to have to address it. You are going to have to find a way to have the conversation. We've seen Twitter light up this week with this war between the tech bros and the MAGA Republicans about H-1B visas. And I had an H-1B visa during my time in the US, so I know plenty about that program. But right there, you've got a real glimpse of just how big an issue this is. And Trump's base is very clear on what they want with this. It's very, very clear. It's jobs for Americans. It's not uncontrolled immigration. You have to find a way of having that conversation. You have to have it in the UK. You have to have it in Europe. The place where it's been had so far in Europe is Italy. Giorgia Meloni, who, again, a far-right politician who, if she got elected, would trash Italy and bring fascism back and racist this, has proven herself to arguably be certainly the most charismatic leader in Europe, and one could argue the most effective leader in Europe in the last few years. Why? Because she has absolutely prioritized domestic Italian policies. She came in on that platform. She said, I'm going to get a handle on immigration. Italy is about God and country and Italian values. And, to a lot of people, that's racist. To the ordinary Italian, that's the Italy that I know and I love and I feel a connection to. And so this is what we're seeing right across Europe now, is this need to grapple with law and order, immigration, taxes, and debt / the size of governments. They're all the key planks of the kind of right, centre-right parties right across the political spectrum. And what we've seen is a slew of traditionally right-leaning parties, particularly the UK is the perfect example of this. The Tory government for 14 years, for 200 years, the Tory party has been the party of low tax, small government, not closed borders, but controlled borders, and tough on law and order. And all four of those things completely went out the window. And there was a revolt against the Tory party, and they had the worst election showing in the party's 200-year history. There's a reason for that. And the same things have happened right the way across Europe. And so every one of these politicians has to find a way to deal with immigration, with law and order, with the debt. And there are no easy solutions to any of these things. So, be careful what you wish for when running for office anywhere in the Western world at the moment, because you might get really unlucky and win. And that's not going to be a barrel of roses for the next 4 years. That's for sure.
I want to dig into the Europe potential crisis a little bit. As you mentioned, this is a top-down crisis, not a bottom-up. We have a German problem, not a Greek one. That's different. And you've covered this. You've covered Germany in your letter, and I believe you're going to cover France. If I was reading through, you covered Germany a month ago, Poland this month, which was extraordinarily interesting, and probably sounds like you're going to France next. For anybody who's not on top of the Europe situation, so let's start with Germany. What is occurring in Germany that is so significant, Grant?
Well, Germany's politics has always been a kind of basket case. There's always been coalitions that have held the German centre right, centre left, but it's been a centrist country for a long, long time. But the Green Party, because of the kind of coalitions that they've had, the Green Party has had a much more heavily weighted impact on the outcome of policy, because they've been the kind of swing vote in just about every coalition. And so the Greens have demanded all kinds of gifts from governments to get their votes, all of which have kind of crippled Germany's energy policy by shutting down the nuclear reactors and forcing them into solar and wind, which I think we can all agree if we could make a transition to a completely green power grid, we'd all do it tomorrow. There's nobody, unless they're working in the oil and gas industry, who wouldn't say, great, if you can give me the same energy output, the same quality of living as I get now with the energy for the same cost, I'm all in on the green. It's fantastic. But of course, it's impossible right now. But that hasn't stopped Germany from pursuing these, let's be honest, these very naive green energy policies, which have led them to crippling their own power grid. They shut down all their nuclear reactors. They still burn a lot of coal. The wind doesn't blow across the whole of Germany right way through the year. And guess what? In the winter, the sun doesn't shine as much either. And so they've had these, there's a great word, the German word for it is Dunkelflaut, which means dark winds or dark nights or dark something. But it's one of those great German words, Dunkelflaut, which is basically periods of time when the wind doesn't blow and the sun doesn't shine, and it leads to the Germans having to import their energy from the countries around them in Europe at significant cost. And that feeds through and is crippling the country's famous Mittelstand, all the industry in Germany, which has been the absolute driving force of its economic miracle. And that's, you've got that on one side. You've got political upheaval. You've got energy policy, which is crippling the country. And then the other side of the equation, you've got by far the biggest employer in Germany is the automobile industry. 1 in 4 jobs is connected to the automobile industry in Germany. And because of the costs of energy, largely, and also labor, China is absolutely destroying Germany's car industry. I mean, destroying it in real time. You can sit and watch the sales. They've been pushed towards producing more electric vehicles, which the public now are rebelling against because they realize that they're not the solution that they were promised they were. So it's kind of a perfect storm for Germany. You've got your most significant industry under attack from the Chinese, who can create cars every bit as good and have no problem with stealing technology. Cars every bit as good for literally in many cases a third of the price, a quarter of the price. So imagine the tariffs you're going to have to put on to make these things uncompetitive in Europe. I mean, it's going to be 200-300% tariffs here, not 100% they're threatening. If you just go onto the internet and Google the Xiaomi Xiaomi SU7 car, just Google that car, take a look at it, and realize in China, that's a $35,000 car, which competes in every way and surpasses in most of them your average $125,000, $130,000, $150,000 German or American luxury EV. That's a real problem. Mm-hmm. To say nothing of the export market, which China was for German automobile manufacturers, which the share in China is going down. So whichever way you look at Germany, whether you look at it from politics, top down, whether you look at it from policy, which largely energy policy is the enormous problem. You've got the immigration issues in Germany because of Merkel's largely open border. Immigration is a problem, and all of this has led to the rise of the AfD, another far-right party. And the AfD absolutely has some hardcore far-right elements in it. It absolutely does. But when you look at the leader, Alice, her name escapes me at the moment, I can't think now. But Reader, gosh, I don't know, my complete brain fuzz, probably too late here for me. She's been painted as all kinds of things. And I'm going to leave it and not even say anything, but I would urge people to Google her and listen to some of the things she said, look at her CV, and make the judgment for yourself whether this is a far right, racist, fascist danger to German society or not. And what a lot of these right leaning parties have been forced to do and will be forced to do is to kind of kick out the extreme elements. But if you look at the left, we've all seen the extreme elements on the left, but it's very rare that you read about far left factions in Western democracies, but they're there. They're well and truly there. Mm. So Germany is is in a world of hurt at the moment, and the economy is struggling. Every data point coming out seems weaker than the last. And of course, if we do get problems in Europe, and Germany is once again expected to be the largest contributor to any bailouts of any of the southern European countries, or even there's some kind of push inside Germany, and the AfD have talked about this already, that like Trump saying, hey, we're fed up with paying huge contributions to NATO. It's about time the European nations paid their way. And again, I think he's got every right to at least have that discussion. Germany might start saying the same thing. Hey, we're the biggest contributor to the European project. How about the French kick in a bit more? Right. And France is in no position to kick anything extra into the kitty. They've got problems all of their own. Holland's too small. It may be better run, but it's too small to make a difference. Austria, likewise. You've got Viktor Orban in Hungary, who again is a far right guy, and he's very Trumpian in his bombast and his views. We've had a Romanian election which was cancelled because the far right won. Europe has always been a basket case. It's always been a project that was conceived in incredibly good faith and with incredibly good intentions, and it delivered a lot of that in terms of stopping this cycle of conflict at the heart of Europe by bringing Germany and France together at the center of this project. But it was never going to work without a shared treasury, and a shared treasury was never going to be agreed to. And if you look on YouTube at Margaret Thatcher's last speech to Parliament before she was ousted in essentially an argument within her own party about membership of Europe, you will see her lay out just about everything that's happened in Europe. But 10 years before the European project, before the euro was launched. So none of this is a shock, really, if you sit down and think about the interests of all the parties involved and the policies of all the parties involved. None of this is a big shock. But again, it comes back to this idea that because it has held together through European debt crisis, through 2008, through all these kind of tests and strains, because it has held together, people assume that it gets stronger every time they hold this thing together, when the reality is it gets weaker every time. And to have Germany topple would be, I think, the death knell for the European Union. And, I had a fascinating conversation with a very dear friend of mine, Sir Stephen Wilkinson, recently. And, his big cycle theory, and he's done a lot of work on cycles. And for anyone that's interested in cycle theory will know that how many different cycles of differing lengths that you can overlay on top of each other. And there are various points when a lot of these cycles kind of align, and they tend to, history would prove, be significant turning points. And Stephen mentioned to me this idea of the nation state being a cycle, and perhaps we're coming to the end of the nation state cycle. And that's a profoundly thoughtful idea to kick around. And I've been doing that nonstop since he talked to me about it. And of course, pick any country you want and go back far enough, and it wasn't a nation state. It was a collection of, villages and then towns and then cities. And, Italy's only been the country that we understand it to be for the last, 180 odd years. Mm-hmm. It's younger than America, Italy. And yet in people's minds, it goes back to the days of the Roman Empire. But Italy, as the country it stands today, is a young country. And if we are approaching the end of the nation state cycle, i.e., does America break up because the states aren't willing to subsidize each other? Does California secede? Does Texas secede? Does Florida secede? Does Europe break up? Does Germany break up? Do we get this Hungarian, Prussian split in Europe? There is so much history that, if you go back far enough, completely redraws not just the maps of the world that we've become accustomed to, but the political alliances that hold, and on a country-by-country basis, redraws the maps within those two. And this is not to say all this is going to happen, but for the first time in maybe a century, the possibility of it happening is not zero. And I think anybody that's been paying attention would have to confess that if someone had said to them in 2004 that, hey, I wonder if California will ever secede from the United States, you'd have been laughed at, and the correct probability of that was zero, probably.
Mm-hmm.
Today, if you had that same conversation with people, I guarantee you, if you sat at a dinner table and threw that out there as a conversational topic, you would get a lot of different views on that now. And that should be telling you something. Germany's the same. Individual countries within Europe are the same. The Europe is the same. And in the East, we've got the BRICS countries coming together. We've got countries trying to come together as a bloc and create something that they haven't had at any point in time. So this nation state cycle continues to turn. And, I'm still thinking this through because it really knocked me for six when Stephen talked to me about it. But I think it's an important idea to give some thought to.
Yeah, that's fascinating. I want to dive into that as well. I'm going to look up. Was this conversation with you and Sir Stephen recorded? Is it in your?
This wasn't. It was. We talked a little bit about it. He and I had this conversation in Switzerland. Okay. He and I we had dinner with Tony Deedon, and the three of us were talking about this, and it was truly fascinating. We talked about it, he and I, during the recent Super Terrific Happy Hour in Florida. Okay. On stage for a little bit. But it's a profoundly important idea. And I'm no further along it than that at the moment, but it's preoccupying an awful lot of my headspace at the moment.
I'm not going to miss your next Super Terrific Happy Hour. I almost was able to make it to Florida. Last minute.
Yeah, I know. We missed it. It was great fun.
To make it. Look, so I want to get back to Germany for a minute here. So, crippled energy policy on the back of short-sighted virtue signaling narratives, moving the country away from its nuclear power towards green energy, which just at this point in time does not have the return on investment to make it sustainable. And if you look through the transitions of energy, as far back as you can find, we only actually make those transitions when the return on investment becomes more favorable to make that transition. We've never done it for the right reasons. Crippled energy policy in Germany specifically, their core industry is under attack by a ruthless competitor who can produce a similar product at a fraction of the cost, this being vehicles. Germany probably still makes the best internal combustion engines on the planet, but now they're trying to make EVs and they just can't compete with BYD making vehicles at 25% the cost. Alice Weidel is the leader of the AfD.
That's it.
And maybe Germany is trying to make a similar transition to a right-wing government. The same prejudice labels are being thrown out. Maybe those are a bit stickier in Germany for obvious historical reasons, and that transition will just be a lot harder. The significance of this is that Germany is the economic engine that holds the EU up, right? They were the economic miracle that came out of 1945, a country that was crippled. But by 1960, they were obviously leading the way for Europe very quickly. If they can't hold that torch, though, maybe the whole thing crumbles. That's what you're saying here. And who could be a successor in Europe other than maybe France? But as you mentioned, that's unlikely. Love you to touch on why at a simple level, if you can, Grant. Similar complications in France. What's the core issues?
Yeah, well, we've seen. France has its own political issues. We've seen that. I mean, Macron pulled a David Cameron and had a vote which he should never have allowed people to vote and lost it spectacularly. And since then has been flailing around, going against all kinds of parliamentary order to kind of maintain this hold on power and refusing the right of people to form governments. I mean, what's happening is, I would think that you guys in Canada have become very familiar with this, with some of the things that Trudeau has done in terms of, the Freedom Convoy was the obvious one that stands out to me in terms of pursuing policies that are just no way can they be described as in keeping with how a democracy should be run. We see the same thing in France. And France has, if you look at the CDS on France, it's blowing out. If you look at French debt, it's been downgraded. French debt is trading very, very poorly. France doesn't have any money to kick in to Europe, and if it's forced to put 5% of its budget into NATO, it's going to have a problem. And every country in Europe, thanks to the advances that Putin's been making into Ukraine, is finding the need to find more money down the back of the sofa to put into defense spending, which is another huge inflationary aspect that we haven't had a chance to talk about yet. So you've got a very weak Germany. You've got an economically fragile France, both of which have serious political turmoil at the heart of their democracies. And you take those two out of Europe, and what are you left with, really, realistically speaking? You've got 25 other countries, but a lot of those are the small Eastern European countries in terms of the kind of economic powerhouses. You've got Italy in terms of its size, but it's a net, it's not a net contributor to the project. You've got Austria, as I said, Austria and the Netherlands. Belgium's not big enough. Poland, I think, is a fascinating country, and I've written about Poland recently because I find Poland to be a country that potentially has a much brighter future in Europe. Although it does have some rather nasty neighbours to its east. But there just isn't anyone to pick up the slack of Germany, and to have Germany and France weak at the same time, it would not take much. If we had another debt crisis in Europe right now, one of two things would have to happen. Either the Germans would have to capitulate to keep the European Union together and violate all kinds of its own internal political red lines. That, I suspect, at a time when the German antipathy towards their government is high and rising, would lead to the kind of backlash which no German leader would be able to survive. Or they have to say, no, we're not going to kick any more in there. We just can't do this. And that would put the entire project in peril. So, there's been a lot of ink spilled about the potential for Europe to unravel. Everyone thought 2012 looked like it might be it. And there's, we had Draghi come in and talk about his whatever it takes speech. And I gave a presentation on this a couple of years ago. When Tim Geithner wrote his book, I forget what the title of his book was, but it was his account of the 2012 financial crisis and thereafter going into the European debt crisis. And he talks in there about Draghi's whatever it takes speech. And he said that he saw Draghi right afterwards, and Draghi basically told him that he wrote that literally on the back of a napkin before he went out and gave the speech. And those three words, whatever it takes, they are credited with holding the European Union together. And it wasn't a plan, it wasn't a strategy, it was an unelected official standing behind a podium talking tough to a load of bankers and trying to jawbone them into believing that everything was going to be okay. And it worked. It worked.
Wow.
But would it work today? I doubt it very, very much.
That's a fascinating little background on that speech, by the way. I hadn't heard before.
Stress test.
Grant,
Stress test. That was the name of Geithner's book.
All right. Okay. I know it's super late where you're at. I think I'll let you go. I appreciate your time today coming back on the show and helping me unpack Europe specifically. And there's actually more I want to dive into. I'm going to save that for the VRIC conference coming up now. We are 2 weeks away. Vancouver, January 19th and 20th. Go to vricmedia.com, or just for fun, you can also go to goodbyejustin.com. And we're having a farewell Justin party at the VRIC this year. So Love to see you there. Grant will be there. And if you want to meet him, grab yourself a VIP ticket, because on the Sunday night of the event, we host a cocktail party at D6 Lounge at Park Casino. It's super fun. Grant, Danielle DiMartino booth, David Rosenberg, Robert Kiyosaki, many, many more. Over 80 keynote speakers will be there. They'd love to meet you. And I'd love to meet you. So check out a ticket. And Grant, thanks so much for coming back on today. And I can't wait to see you in person very soon.
Great pleasure. I'm looking forward to continuing this chat on stage. And we've just scratched the surface, my friend. There's so much more to talk about.
No doubt. No doubt. All right. Thanks, man.